Welcome back to Pro News, where we break down the latest twists and turns in the financial markets. This week, we're tackling the highs and lows across the Nasdaq, diving into oil's slippery slope and much more. Strap in. Let's take a look at the dollar index's performance from last week. The dollar saw a modest increase of just over 1%, climbing steadily each day. Despite these gains, it couldn't quite make up for the drop experienced on the 3rd of November. On Thursday, Chairman Powell gave the dollar a bit of a boost. He doubled down on his stance to push interest rates higher, although there were some whispers among some FOMC members that we might have already hit the peak of interest rates. On the charts, the dollar index has been sticking close to its 50-day moving average, a key gauge of what traders are feeling. It's as if the dollar supporters took a breather early in November, taking some profits after a long uptrend, and now they're gearing up for another round. Looking at the fundamentals, the dollar's steady climb can be chalked up to the favorable interest rate differentials when pitted against currencies like the pound, euro, and Aussie. Add to that the US's lower inflation rates and stronger economic performance, and you've got a recipe for a tempting carry trade that's pulling capital into the US market. Since November kicked off, gold has hinted it might be hitting a ceiling, especially after it couldn't quite hold its ground above the $2,000 mark. And the previous week, we saw that retreat picking up pace. From a technical standpoint, what we're seeing could be considered a bit of a breather, a corrective pullback after its recent sprint, as long as the price stays north of $1,935. Why is that number important? Well, that's where we find a key Fibonacci retracement level and the 200-day moving average. Now, if gold slips below this crucial support, it could be a signal for a more significant drop, perhaps even down to the $1,800 territory. Keep your eyes on the charts and stay tuned as we monitor whether gold will regain its shine or continue to cool off. Now moving on to the Nasdaq 100. After a standout week, bridging October and November, the markets were buzzing. But come Thursday evening, Powell's remarks threw a bit of cold water on the markets, with his hints at further rate hikes prompting a slight pullback in equities. Yet, here's an interesting note. The Nasdaq 100 shook off its slump, making a noteworthy jump over the 15,300 mark even, if only for a short while. The end-of-the-month buying spree was a sight to behold, often a signal of market turns. Remember though, it's not necessarily a straight climb from here. Periodic corrections are part of the market cycle. Switching gears to oil, it was a tough week. WTI dipped below the $80 mark early on, and Brent grappled with that level midweek. Both benchmarks slid beneath their 200-day moving average, which doesn't exactly paint a rosy picture. And it's not just sentiment. The global economy is starting to show signs of reduced energy appetite. In a late week twist, the US hinted at easing restrictions on Russian oil, a move that could add more downward pressure on prices, at least in the short term, though it might be more about market mood than actual economics. Let's catch up on the crypto market's latest rollercoaster ride. Last week, Bitcoin finally broke free from a 3-week lull and flirted with the $38,000 mark. But as often is the case with our digital gold, this spike was met with a sharp but brief correction, taking it down to around 35.6K. This surge in Bitcoin over the past month isn't just a solo act, it's been a beacon for a wider altcoin market. Ethereum caught a wave of that positive energy, surging to $2,100 toward the end of the week, echoing its highs back in April. And let's not overlook Solana, which has leapt an impressive 120% in the last 4 weeks, eyeing a comeback to its May peak. Yet, it's still sitting at just a fraction of its value from 2 years ago. The upcoming week is set to pivot around key US economic releases. We've got consumer inflation data hitting the headlines on Tuesday and retail sales figures stepping into spotlight on Wednesday. Inflation rates have been holding steady at 3.7% for the last couple of months, which is nearly twice what the Fed aims for. Yet, there's chatter about the rate hike cycle nearing its curtain call. Is inflation finally under control? the markets are all ears waiting for the answer. Across the pond, the UK is facing its own inflation challenges, hovering at a significant 6.7 annual rate. With one of the widest gaps between inflation and policy rates, second only to Japan, the Bank of England might just tighten the reins with another rate increase, potentially giving the pound a boost. Retail sales, a critical economic indicator and a precursor of inflation trends, are also on the agenda. Thanks to employment gains, consumer demand is strong, adding more fuel to the fire. Strong retail sales might rekindle expectations for further rate hikes and could give the dollar some muscle, but whether they will help the equity market remains a big question. As earnings season starts winding down, the retail sector takes center stage. Watch for earnings from big players like Alibaba, Target, and Home Depot. Keep it locked here on Pro News, and we'll guide you through these market movers as they unfold.